move on now to our movers and shakers segment, where we track a whole host of stocks which are buzzing in trade. And we have our entire research team joining in to give you all of the stocks which are in focus. So, Anand, let's go ahead with the real estate space. Anant Raj and Lodha is what you're looking at.
I am, yes. Anant Raj is in focus because they are looking at a fundraise. Sources are suggesting that there's a QIP which is in the works. 1100 crore, that is the total size of that particular QIP. The indicated price is 662 rupees a share, which is around 4.5% of yesterday's closing market price. So we have already seen that adjustment taking place today as well. That would lead to an equity dilution of 4.5%. Now, do remember the company is looking at expansion in the data center space. So these funds could be used there. But yes, we still need to speak to the management about it. For Lodha, Q2 update, there was a single-digit growth that we saw in pre-sales this time around versus high double-digit growth that the company has seen overall so far. So pre-sales up 7%, collections up 13%. First half sales have come in at 9,020 crore rupees, which compares with their full-year guidance of around 21,000 crore rupees. So the company says, yes, first half was a little weak, but second half will see launches, will see more approvals, and they'll be able to achieve that guidance of 21,000 crore rupees. They also added one project with a gross development value of 2,300 crore rupees in the Mumbai metropolitan region. So they are positive going ahead. But the stock maybe also going by the market sentiment and the fact that there was single-digit growth this time around for the company.
All right. Thanks a lot for that. That's about Lodha Developers, down about 1%. Vivek joins in on Shaily Engineering. Vivek, yesterday there was a supply overhang that seems to be observed fairly well.
Absolutely right. So, one of the larger funds called Lighthouse India Fund, they held a little over 4.3% stake in the company at the end of Q1. Yesterday, they managed to exit close to 3% stake, almost 13.3 lakh shares. So, Lighthouse India Fund sold all of this, and the total quantum was a little over 280 crore. But the good part is that most of the shares that were on offer were absorbed. Motilal Oswal picked up a little over 3.3 lakh shares. Stallion Asset picked up almost 2.5 lakh shares. Some of the other buyers, marquee names, remember, Aditya Birla, AMC, Bofa Securities, Adya, Abu Dhabi Investment Authority, among others. A little bit of overhang in terms of the fact that another 1% at this point of time, we're unsure, between Q1 and Q2 whether there has been any sale, but it appears as though majority of the selling overhang that was there on this particular counter appears to have ebbed. The stock opened gap up after a very sharp up move yesterday, but has cooled off a little bit in the session today.
Okay, all right. Thanks very much for that. Well, Manglam, you're looking at Godrej Consumer?
Yes, Godrej Consumer too gave their second quarter update this time around, and it was a mixed bag. What was actually taking place out here was something that the street had anticipated already because of HUL's second quarter update. GST rate reduction led to short-term trade adjustments or adjustments across trade channels, and as a result of which their standalone business grew in mid-single digits. Now, that's a positive as compared to, say, HUL, which was flattish. Here, this business was led by low single-digit underlying volume growth. The other parts of the business that did well, we had, the home care business that grew in high single digits, closer to double digits. It was a big decline that was in personal care, where we saw a decline. And the other thing was that Indonesia, that continued to see heightened competitive activity. So till that piece of the overall puzzle, comes back into good shape, the street will be a little circumspect on that part of the business for sure, because now there has been a low single-digit decline in value growth in Indonesia, offset by some good performance in Africa and Middle East. The company, on a consolidated basis, reports mid-single-digit revenue growth, but here's where the fly in the ointment is. EBITDA will decline for the quarter due to GST transition. While they're hopeful of recovery in the second half, remember, it's been the third straight quarter where there has been an EBITDA miss. In fact, the fourth straight quarter that there has been an EBITDA miss from the company's standpoint, and which is why, despite the confidence of recovery in the second half, the street is taking it a little easy. The stock down by about 1%. I think that wraps up our movers and shakers segment on halftime report. But as